Welcome back, everyone. Next, we have Nova Minerals Limited. It trades on the NASDAQ under the symbol NVA and on the OTC pink sheets under the symbol NVAAF and on the ASX under the symbol NVA. It's a gold and critical minerals exploration and development company focused on advancing the Estelle project. Please welcome its CEO and Executive Director, Christopher Gerteisen. Welcome to the conference, Christopher.
Thanks, Anna. Great to be with you. It's a very exciting time for the company. We've just completed our NASDAQ listing, only been trading about 10 days. And what we have is the Estelle project, where we're developing North America's next major gold and critical minerals district here in Alaska. We've been focused on the gold, but had very significant discoveries of antimony, silver, copper, and these other critical elements that are so highly sought after these days. At a glance, large project area here in Alaska, 200 square miles. To date, we've defined almost 10 million ounces globally. Now, within that, our economic resources in the pit at a $2,000 gold price is over 5 million ounces. So those can be converted to reserves for future production scenarios, which we're well on the path towards achieving. That's across two deposits, Corbel up north, bulk tonnage system, and then what's really become the jewel in the crown down south, RPM, very high-grade system. In addition, 20 other known prospects at various stages of advancement. One to point out there is Stibium, where we've made an exciting antimony discovery. So here we are in Alaska, the Tintina Gold Belt. This has been one of the most prolific belts in recent decades, the land of the intrusive related gold system. Here's our neighborhood, some names you might recognize. Kinross, Fort Knox with their flagship deposit, been operating successfully for almost 30 years there. Just to the west of us, Barrick Gold with Donlin, almost 40 million ounces there. So 10 million plus ounce deposits, not uncommon in our neighborhood, and that's certainly what we're on to at Estelle. Now we're zooming in, south central Alaska, where the project sits 100 miles to the west of Anchorage and the main population center here in Alaska. First thing to note, all on state land. No federal land or native corporation land to contend with. What that means in terms of permitting, it'll be a much more streamlined process dealing with our very supportive just state agencies. Infrastructure, so important with these projects. Access, we have a 4,000 foot plus airstrip on the site and bring in DC-3, very large aircraft, support the project year round. That pink line, that's our winter road. Very common in this part of the world, do a lot of heavy freight haul along that. It is seasonal. So now we're getting very excited about the red line. That's the state's West Susitna Access Road project, state-funded project, whole economic corridor through there. We're only one of many beneficiaries at the end of the road in the mining district. They're looking to break ground on that next year, already in the infrastructure plan and budget. So that'll come online. That'll be a big bonus. In terms of power, lots of options. The blue line is the proposed gas pipeline heading out to the Donlin project to the west of us. That's it. That'll sit about 10 miles to the north of us, so potential offtake there. Also looking at an option of our own transmission line, the yellow line heading out to the Beluga power plant. All gas fields here, powering Anchorage and the valley here where I live. That's a 70-mile transmission line. Now we're also gaining major momentum is this coal project. Not averse to coal in Alaska. 60-70% of our power does come from coal. The most recent coal-fired power plant in the United States was built in Alaska about 4 or 5 years ago. That project there is also one of 3 or 4 across the United States new coal-fired power plants that the federal government's looking to subsidize for carbon capture and sequestration. Ideal geology for that out here. That'll be a 20-mile transmission line, probably one of the most cost-effective solutions. But interestingly, we're also looking at micro-nuclear reactors. Big push for that in the state of Alaska. All the remote Alaska Native villages want these things. We've been talking to companies like Westinghouse and Nano Nuclear out of the UK, Radiant. The technology's all there. It's just a regulatory issue. And the first one of those is set to go into Alaska in the Air Force Base there in 2026. So all those options are the CapEx is borne by the power provider, and it just becomes a long-term power purchase agreement, part of our OpEx. Also, diesel generators. This is how most mines do it these days. And certainly in terms of our early startup strategy, which we'll go into, the winter road and diesel generators gets us started as early as possible. And those other options are something we can grow into as we move forward. So the project, 35-kilometer long mineralized intrusive corridor through here. We've been focused on 4 main areas, Corbel and RPM, where we have our resources defined, and then exploration mainly at Stony and Train. There are some outerlying prospects, but you can see it's a trend. They call us the Carlin of the North, similar to the Carlin trend in terms of scale and potential future resource endowment that made companies like Newmont and Barrick. So that's what we're dealing with. Spinning around, looking north, our direct neighbor there is U.S. Gold Mining, Inc., NASDAQ-listed company with their Whistler project onto porphyry copper gold deposits. We have same geology on our site. A number of our exploration targets are these large porphyry systems. Let's take a closer look down south here at RPM. So to date, we've defined 3 main zones. North, south, and valley all have the potential to merge as we continue our work. Relatively recent discovery, only been working on this about 2 years with great success. That RPM North Zone, already 780,000 ounces defined with a very high grade, high confidence core of 330,000 ounces at 2.4 grams per ton. That was the last resource update at the beginning of 2023. We've done a lot of drilling since then, and our target this year for our resource update is 500,000 ounces at 2 grams per ton in that high grade core. Then we made a new discovery just recently at RPM South. Initial drilling yields 350,000 ounces there. Here's the actual drilling. So you can see that most of it has been focused around RPM North, that high-grade bonanza zone, as we are on the path to get that into production as soon as possible. And then we keep chipping away at RPM South and Valley. Some drill intercepts, just spectacular, world-class intercepts, some of the best intercepts globally over the last 10 years for sure. Let's read a couple off. RPM 005, 400 meters at 3.5 grams per ton, including 132 meters at 10 grams per ton. How about another one, just because it never gets old? RPM 015, 258 meters at 5 grams per ton, including 178 meters at 11, 45 meters at 25.3. So I could go on and on. You get the idea. These we repeat these over and over again as we step out and infill RPM North, RPM Valley, and then at RPM South, early days, new discovery, but we're into it. And you can see RPM 023, 333 meters at 0.9 grams per ton, including 94 to grand, 15 at 2.3. That's certainly pay dirt. We can make a good buck off that. Long section, looking north through RPM North and Valley zones. And you can see I have the 1 gram per ton cutoff grade shell, very high cutoff, and RPM North still hangs together. Very nice, thick, broad, continuous zone. That's that high grade core we're going after for this early production strategy. Now we've drilled down into the Valley and another zone, this Valley zone, high grade zone starting to take shape. And we continue to infill drill that. Putting on the 0.3 gram per ton grade shell. Now it really bulks out, much more aligned to a mining cutoff. You can see some rocks on the right-hand side. That's what we're after. It's those light-colored rocks. That's the mineralized intrusive, intense veining, visible gold. And then the dark-colored rocks on the bottom, hornfels, tends to be barren. So it's a very visual deposit. We know we're in the right stuff when we're drilling it, which makes it very nice. We generate economic pit shells. This one you're looking at is at an $1,800 gold price. And of course, the resources we report for NASDAQ, SK 1300 standard, is in-pit economic resources. But the deposits are much larger. You can see hanging outside the pit here, still resource there off to the side, lots of resource outside the pit, all potential future upside as we continue to infill drill those ore areas. And with the rising gold price, I mean, $2,400, these pits will just get bigger and deeper, and we'll capture more and more of that resource and report more of that in our official NASDAQ resource statements as we move forward. Resource classification, high confidence measured and indicated at RPM North, where we have all that close space drilling. And you can see this drilling here is not included in the resource yet. That's what we did last year. That'll be in our next resource update. And that's why our target is 500,000 ounces at 2 grams per ton in the next resource update. And then the remainder of the deposit remains inferred. And so still work to do there to infill and prove those up. And these zones remain open and they link. All of our drilling indicates we map that mineralized intrusive in between the south and the valley zone. 600 meters of strike length, big volume of potential upside, also between the valley and the north. This is still open to link those two zones. And that's what we're drilling right now as we speak. So currently, this deposit in total, 1.1 million ounces. We see this easily as a 2-3 million ounce deposit. We just have to get in there, infill, and prove that up. That's RPM. That's what we'll be getting to in our early production scenario. Let's take it to some exciting exploration opportunities for the future. 5 kilometers to the north, the Train area, another massive intrusive-related gold system taking shape here. What you're looking at is surface sampling, rock chips from outcrop and soil samples, and you see the same story. High-grade gold at the Train prospect, everywhere up to 80 grams per ton, 30s, 40s around. 1 kilometer to the north. We actually think Train and Trumpet connect as well, that intrusive, we map it through there. But at Trumpet, again, high-grade gold up to 132 grams per ton. Now we're starting to recognize the multi-element potential as well. Hundreds of grams per ton silver, percents of copper, antimony, many of these other critical elements in there. On the east side, the Shoeshine prospect, 1,290 grams per ton, just shows you that's the highest rock chip ever. Shows you the extreme high grade potential here at Estelle. Again, multi-element potential: silver, copper, antimony. And then the last one in this area, Muddy Creek, gold only, a little bit of silver, not much of the other elements. Very clean metallurgically, but very high grade gold up to 127 grams per ton, 90 grams per ton. On average, the rock chips yield 18 grams per ton. Even the soil samples, which are generally just an indicator, kind of pathfinder for target generation, running ore grades at 2.5 grams per ton on average in those soils. So those are some exploration areas for exciting upside potential. Get in there to drill in the future years to establish a third resource and a fourth resource to join RPM and Corbel, which we'll go to now. So this south area, this is where we'll be starting as soon as possible to get that high grade RPM for a low capex, quick cash flow, very high margin. Heading north now to Corbel, past our fully winterized 80-man camp here, all the facilities, airstrip, on-site prep lab, year-round operation, and heading north to the Corbel Valley. Same story, lots of things we're working on, but let's focus in on those black dots where we have the resources defined. To date, Corbel main deposit, 2.7 million ounces of in-pit resources. Then a short distance away, new discovery at Cathedral. Initial drilling there yields 1.3 million ounces already. Then that knob, that's what we're after at Cathedral. Here at Corbel, so this is a bulk tonnage deposit, massive 2.5 kilometer strike length. It's not just one of these narrow vein things. It's a sea of mineralization right on the surface. The entire host rock has these mineralized sheeted veins, lends itself to a very low strip ratio. So very little waste. Almost everything you dig up there is some kind of pay dirt, which is ideal for the economics. And then 500 meters away at Cathedral, just getting started, but at a minimum, we see another Corbel main taking shape there. Now we're in a long section looking east through Corbel main, 800 million tons at 0.3 grams per ton. Now, so bulk tonnage, lower grade deposit in total, but there is a higher grade feeder core through there, and some of these intercepts here represent that: 94 meters at a gram, 101 meters at 1.3 grams, including 30 meters at 2.4, 113 meters at a gram. So that's very typical of that high grade feeder core here with the 0.5 gram per ton grade shell that encompasses that core, very continuous down the center along strike of that deposit. 0.3 gram per ton grade shell really bulks out. As I said, 800 million tons. So what do we intend to do with this? So initial early startup at smaller scale at RPM for that high margin material, and then out of that cash flow, we'll grow ourselves into this deposit. At this deposit, when we first get into it, I mentioned the high-grade feeder core. That'll be a starter pit right on the surface. We'll get into that direct mill feed. The lower-grade portions of the deposit, to understand, there's sheeted veins through there. When you selectively sample those veins, they're running ounces per ton. It's just the vein density is less out there. So the lowest-grade portions of the deposit we'll send off to the heap leach pad for a low-cost recovery method, and then we'll classify a medium-grade material and utilize ore sorting. We've done test work. It just works exceptionally well. We're seeing a 10-time upgrade by separating out those high-grade veins. Our test work shows we can take 0.4, 0.5 gram material and upgrade it up to 4 to 5 grams per ton. Most of the in-pit resources there are high confidence indicated, working on this years before we even discovered RPM. There are a lot of inferred still around the edges, so plenty of upside. We can continue to step out and continue to build this deposit out. And then Cathedral, early days, all still inferred. Here are some surface samples at Corbel, and you can see the grades: 114 grams per ton, 98 grams per ton. That would be taken from that high-grade vein material. That's what I'm talking about with the ore sorters. The ore sorters will be separating that out, and you can see with those grades how we readily achieve that 10-time upgrade with those ore sorters. More on the process now. So we've done quite a bit of metallurgical test work and developed our flow sheet. It is particulate gold, quite easily liberated. Nothing fancy going on here. Conventional off-the-shelf technology. Crush, we mill, we float to produce a concentrate, then we regrind down to 22 microns. At that grain size, great gold liberation. When we leach it, we're getting over 96% recovery. In scoping level test work, now we're into the feasibility study stages, honing in, finding efficiencies. These numbers are only set to improve. So to recap, RPM, early high grade, into the mill, and then we'll get into that, grow ourselves into the Corbel deposit, starter pit, high-grade material, straight to the mill. Lower grade portions of the deposits go off to the heap leach pad. Then we'll classify a medium grade, hundreds of millions of tons of that, into the ore sorters, focus on maximizing the grade. The accepted portion out of the ore sorters running 4 to 6 grams per ton straight to the mill. And then the reject still has some gold in it, and that'll go off to the heap leach pad. So very efficient resource extraction, maximizing the total recovery over the life of mine, all straight to the bottom line, of course. That's the process and the operation. Now we're to another exploration area just south of Corbel, Stony. Bit of a different beast, polymetallic stacked vein system, high-grade gold at numerous prospects everywhere here, but also thousands of grams per ton silver, up to 12% copper, and multi-element antimony and the other elements. I mentioned porphyry coppers. We believe we're on one of those at Wombat. High-grade gold and up to 6% copper here. So potential porphyry copper deposit. Then the last prospect here is Stibium, our most recent discovery. We found gold there, and you might say the antimony found us. What we see on the surface is massive stibnite veining, that, of course, being the primary ore mineral for antimony, that like the photo you see here, massive stibnite. On that basis, we went back through all our multi-element data, and we've seen elevated concentrations of this at numerous prospects, which I've pointed out. This has also drawn the attention of the Department of Defense. We produce none of these elements in the United States, particularly antimony is one of those. 100% import reliant on China and Russia. So there's a big push on now to establish and fully secure U.S. supply chains, because not only is antimony used in all the clean tech, high tech, green tech that we know about, batteries, solar panels, it's used in all the munitions as the primer and as a hardening agent in the projectile for 155 artillery shells, small arms, you name it. And so that's why it's such a national security concern, and the Department of Defense sees us playing a major role in getting those supply chains back to the U.S. And added benefit is provide significant byproduct credits to the project. So that's the project. You can see district play will be out here for decades and decades with multiple mining centers and producing multiple commodities. I mentioned some of the other critical elements, antimony for sure, but you can see in this table the other elements. We have very elevated concentrations: bismuth, gallium, and indium, key for the semiconductor industry, lanthanum, and some of the rare earths, scandium, stealth technology for the Air Force. So all of these elements are also highly elevated concentrations, and we tend to pursue those here as we move forward as well. So here's the flow sheet again. We talked about most of this, but for the critical elements, it's this back end piece I'm talking about. So in our flow sheet, we have the opportunity. We process for gold anyway, but at the back end with the flotation circuit, we can take off concentrates like antimony will require that, and then send off to a refinery. After we leach the gold out, we have that waste stream that usually just goes off to a tailings facility. In this case, we can divert that waste stream to a critical minerals extraction plant. This is what the Chinese do and how they've captured the market. So this is what we're working on with the Department of Defense for the development studies and the capital required to establish these critical minerals extraction plants. And of course, again, providing significant byproduct credits for the project. So our strategy, just to sum it up, the project benefits from having great optionality in terms of how you attack it and develop it. It is a larger project, higher CapEx, $400 million for the entire project, including RPM, Corbel, and these other opportunities. However, in these current market conditions and the company of our size, we have the option, which we're doing now, and this is our strategy, to go straight for RPM, quick startup. We could be producing gold within, best case, within 24 months, low CapEx, very high margin, and then through that free cash flow, grow ourselves into the much larger deposit on our own, or potentially strategic partners like some of the majors or mid-tier companies, which we are talking to, and potentially come on board. They need a project like this to fill that reserve, that gap in depleting reserves. They require not many of these projects left in the world. So those opportunities are there. And in addition now, with the antimony discovery, another quick cash flow opportunity to produce that antimony at the Stibium prospect. So it's an ideal, we're in the right place, right time with the right commodities. record high prices for both gold and antimony, and we have them both. Here's the timeline and the value over time. We're currently in the feasibility study. What do we have to do there? We're laser focused on getting RPM into production. We're drilling now, our last drilling program, to prove up as much for the feasibility study for RPM. Metallurgical and technical studies happening in the background. We're looking to deliver that feasibility study to market by next year. And next year, being all on state land, then we'll be ready to submit for permitting. Already well advanced with our environmental studies. That permitting process on state land takes about 12 months. And then at that stage, we'll go into our last fill any gaps with a definitive feasibility study to be in production at RPM, best case within 24 months. Worst case by 2028. So 2 to 4 years on that. Certainly for the larger project, if a strategic partner comes on board, it'll be 2028 for that one. But RPM within 24 months. And then, of course, there's the antimony opportunity as well, even sooner than that. So that's the path to production. We're also, for the gold, we're also trying to fit the critical minerals piece into the production schedule, of course, and all the exploration opportunities along the way. Only scratch the surface out there, continue our exploration. We expect further discoveries and exciting news flow as we go on. Here's the opportunity for the investor. So this is a peer comparison with similar projects, companies, the North American assets that are listed on North American exchanges. You can see the valuation discrepancy here. Our direct neighbor there, a project that's been dormant for 10 years, is running 2-3 times our market cap. Some of these companies are running 10 plus times our market cap. So the point is they're not even close to being as advanced as us in many cases. No resources reported at many of these companies and no technical studies commenced. We're much more advanced, moving to feasibility with with gold production on the horizon. So we believe this is one of the reasons we listed on the NASDAQ. This could be a catalyst for a potential re-rate for Nova once they appreciate what we have here at the Estelle project. Here's a quick corporate snapshot. Brutal over there on the Australian exchange, which is one of the reasons we came to the NASDAQ. 22 million market cap currently. Our resources in the ground are valued at $4 per ounce, less than. Now, on average, industry-wide here for North American listed companies, it's about $50 to $100. So there's quite a bit of upside there that can be realized. Cash and equivalents, 8 million, half in cash, half in our holding in Snow Lake Resources, lithium uranium company on the NASDAQ that we spun out. Our team built that and spun it out several years ago. Top holders, directors and management, including myself, hold almost 10% of the company. We've always participated in the capital raisings, got lots of skin in the game. Our top institutional holder, Nabari Gold Fund, great partner. They really got involved to take a bigger slice of the pie, and they're ready to step up once we deliver this feasibility study for RPM for bridge finance, construction finance. Such a big milestone in this business. That feasibility study opens up all kinds of future funding opportunities. Here's our team. All the bases covered to propel us forward, meet our objectives. Myself, I'm an economic geologist, been around the world doing this for 30 years, taking resource stage projects, bringing them into production, long list of those. Richard, Rodrigo, mining experts, engineering, metallurgy, Louis, construction background, Craig, finance, legal compliance, Avi, our guy in New York, working those capital markets, and the secret weapon, Hans Hoffman, our exploration manager, making all these discoveries and proving up these deposits out there. So just to drive it home, last points, we're in Alaska, that the geopolitical sovereign risk in the world, much more of a consideration. And being in Alaska is a big bonus, and the tenure, all on state land. That is just a big point to make in terms of permitting and just day-to-day operating for these projects. We're an aspiring gold producer. We're not here to flip the project. Now, we would consider a strategic partner like one of these majors that have approached us. So that could be a potential in the future to really ramp up what we're doing here, because, we only get 2-3 drill rigs a year. These guys would go 10, 12 drill rigs and really go to town on this. Myself, I'm from Alaska. I grew up here. I'm back home, live here, work here, pushing the project day and night, pushing it forward, low discovery cost per ounce. Anything less than $10 per ounce is amazing in this business. We're at $5, and that's because we're just going after the low-hanging fruit. It's all on the surface, doesn't require complicated, deep searching, expensive exploration techniques just yet. We're just going for that open pit, low strip, thick, high-grade zones. I think we've demonstrated that at RPM, and that's where we're going out. There is upside potential in underground. All the resources remain wide open, and that pipeline of projects that we have that I've shown you, that's all future upside. The multi-element potential. Gold, the story is strong and getting stronger, but now with these recognition of silver, copper, antimony, and these other critical elements, the project continues to grow and become more robust. And with that, I'll leave it at that. I'd urge all listeners to go to our website, dig a bit deeper. And you'll find this content and much more. And I think you'll find we're onto something quite special here. And with that, I'll open it up for any questions.
All right, great. Thank you. We do have some questions for you. Starting with Jen, heading into the winter months in Alaska, does this present any challenges in terms of both temperature and daylight?
Yes, it does. Yes, it does. And so, it's kind of a love-hate with winter. So we've drilled all through the winter season. We try to avoid it. It does become more expensive. You don't want to start a drilling program in the middle of winter. You want to prepare for it, and it just more fuel consumptions. Things start to break. However, in terms of overland access, many of these outerline prospects are helicopter supported. So in terms of overland access, it's actually we actually like the winter months. You can use the snowcat, the snow machine. So in some ways, it's quite nice and it's preferable. But in other ways, in terms of the cost, it does become more expensive for the reasons I stated.
And Rob McKinley asks, the blue line or gas line seems positive to your offtake. How much will the business be impacted on either side of that, opening or not opening?
Oh, so that's just one of the many options which I pointed out there. In fact, and that depends on the timeline for the Donlin project, Barrick's Donlin project. So that's why we looked at those other options. It's not dependent. In fact, for our early startup strategy, which I mentioned, going straight to RPM for that early startup, low capex, high margin diesel generators. This is how most mines do it, and that's definitely an option that we're looking at for that early startup.
John asks, is monetizing of Anatomy being considered, even perhaps involving a third party to mine Anatomy while Nova can concentrate on gold?
Yes. So the beauty of this project is you could see there that the antimony prospect is separate than the gold deposits. And so the gold deposits are on their own timeline, as we talked about today. But we can take that antimony with the support of the DoD. We're quite advanced in our working with the DoD for Title III DPA grant funding, right? Grant funding. And there's a lot of money there for critical minerals projects. And so if we can take that on a separate path, just with that DoD support, and develop that immediately. It depends how quick the DoD wants to move. And so it's not dependent on the gold project. And just to let you know, put it in perspective, the antimony project is a much smaller scale, smaller footprint type operation. But it's highly lucrative.
And has Nova applied for Department of Defense grants? If so, what's the status?
Yes, we have. And we're quite advanced with that, as said. And with the recent news from China, last week there was news out that China has declared they're curtailing all antimony exports, and it'll be totally shut off by September 15th. So there's, in the background, there's a mad dash on right now to ramp up and bring forward these antimony opportunities for the United States. And certainly we're on that list. And we are actively talking to the Department of Defense to do that. That's all I can say right now.
Eric wants to know if you've considered, or are you open to a royalty deal?
That's an option. Not right now, probably. And we have talked to like some of these royalty companies. I won't mention them by name, for silver and gold, and they do want that. But that's something we'd probably put in place, be more comfortable putting in place when once the feasibility study is delivered, and we can get more value for assets. We're so undervalued right now that it's a difficult proposition at the moment. But as we're going into a gold bull market, I believe, there's no bull market like a gold bull market. As our valuations increase and people appreciate what we have here, then we'll get better bang for the buck, as they say, for any type of royalty deals. But we're open to it. We don't. It's not something we prefer, but it's certainly a funding option when we get that feasibility study.
And Jemiah Wells says, RPM, is that the lowest hanging fruit, and will it be sufficient to cover your burn moving forward?
Yes. RPM in all our deposits, but that one's right on the surface on top of a hill. So you don't even have to create a pit. You just kind of knock the hill off, which is ideal for the economics. And that high grade zone, that core zone of like 150, 200,000 ounces at 5 grams per ton, is sitting right there on the surface. So absolutely, the margins there are off the charts, which is why it's such a great option for us. And that would not only cover our costs, but once we're in production with that, we can grow ourselves into Corbel and some of these other deposits quite easily. So, but our current burn rate, like as we speak now, pre-production, I mean, when we're not drilling, it's not that much, right? We use it's because the work we do is in campaigns, it's seasonal generally. So when we're not drilling, our burn rate, we don't have many employees. It's just like $200,000 a month.
And Marcello asks if you can give an estimated timeline on results, especially turning indicated into proven.
Yes. So the timeline is we're drilling now at RPM, focused on RPM. Results to follow. So this drilling campaign should finish up at the beginning of September, and then give it 4 to 6 weeks for results. So into late September, October results. Then immediately into the resource update. So re-estimate the resources with our target of 500,000 ounces at 2 grams per ton. We think that's achievable. And then, of course, concurrently happening now are all the metallurgical studies and technical studies, everything to culminate in the delivery of the feasibility study next year as soon as possible. I mean, mid next year, we're trying, but it might move into more Q3, Q4 of next year, focused on RPM to start up, but also appreciating how we can then grow ourselves into the much larger project, which the larger project, higher CapEx, around 400 million CapEx, but at current gold prices, it's a $1.5 billion NPV on the larger project. So certainly we want to keep that. Don't want to lose focus that's out there. That's out there.
Well, Christopher, we're out of time. Thank you so much for coming on the conference and giving this thorough presentation. We hope you come back in the future.
Absolutely, we'll do. Great questions, and thanks for your time.
All right, stay with us, everyone. We'll be right back with Region.